Nonetheless, that whole deficit issue that we're seeing is problematic for bonds, but it's not necessarily end of bonds. And I think a lot of people get lost in the sauce with this and saying like bonds are uninvestable. And when in reality, I think the situation is a bit more complicated than just saying, look, the deficit's at 6%, right? Bonds are uninvestable. Because I mean, I know this is a crisis, but you can go back to pre-COVID, going into COVID, right? The deficit went from 3 to, I think it was 13 or 3 to almost 15%, something like some obscene jump, right? And bonds went from TLT went from something along the lines of 100 to 150. So to say that, just because the deficit's at 6% or 6 to 7% means bonds are uninvestable doesn't necessarily hold true. It matters really where the market's implying the future deficit is going to be. And that's what bonds are, right? Bonds are an inflation and growth component, but they're also a credit component. You have term premium, you have a baked in premium into your yield as to how reliable the underlying issuer, or in this case, the United States, is going to be in paying back your debt or paying back its debt without necessarily inflating it away. That's what term premium is.